If you invest in stocks or ETFs or both, and you're worried about Moody's downgrade of US debt, and then you start hearing videos on social media about how investors are pulling money out of US markets and putting it into European markets or Asian markets or international ETFs or emerging market ETFs, hold on. I'm going to tell you why I'm personally, as an investor in stocks, not really worried about this, and I'm not really doing anything about it. Now, you might notice a short-term boost in international ETFs, but if you look at the 10-year trend, they don't really perform all that well. And emerging market ETFs are also up in the last year, probably due to concerns not just about our debt, but the trade war and tariffs. But their 10-year performance is not that much better than just this last year alone. Let's say you invest in only the S&P 500. Yes, these are the 500 largest US-based companies. But they're not just focused on the United States. Many of these companies, not all, but many of them, are global companies. So if foreign governments stop buying US treasuries and the US dollar weakens and unemployment goes up, it doesn't mean that Apple will suddenly sell fewer phones in China. It doesn't mean that Nvidia is no longer the #1 chip supplier in the world. It doesn't mean that Meta no longer generates ad revenue overseas. Over 60% of Apple's sales come from outside the United States. I have all these numbers written down on my screen, so I'm just going to be looking that way. Nvidia, 55% of their revenue is international. Google or Alphabet, 53% of their revenue is international. 55% of Meta's revenue is international. 60% of Netflix, international. McDonald's, 60%. Procter & Gamble, 52%. Even Amazon is around 30% international and growing. And if you already own an S&P 500 ETF, 40% of your revenue comes from abroad. The debt is concerning. The downgrade isn't great. But this doesn't mean that people in Mexico or India are going to suddenly stop buying and drinking Coca-Cola. Even if your portfolio feels like it's dominated by US stocks, or an ETF focusing on only US companies, remember, a lot of these companies are actually really global companies. And you already have that overseas exposure. Smash that follow. See you later.